Hello and welcome to this special episode of Big Money, where we're going to discuss why independent insurance plan is important for homemakers. So if you are a homemaker or if you're somebody who's concerned about the well-being of a homemaker, then this is a must-watch episode for you. And before I go any further, if you haven't done it already, please do subscribe to the Federal's YouTube channel to ensure you do not miss out on any of the useful information and news updates on this platform. In India, usually the primary earner of the family purchases a life insurance cover for themselves, and most homemakers remain uninsured. This trend is changing for the better. A recent online survey of 5,000 respondents conducted by PolicyBazaar found that independent term plans meant for homemakers constitute about 15% of active policies in the country, which is a very welcome change. Insurance companies are catching up with this new trend in India. Insurance majors have come up with independent term plans targeting homemakers recently. So what is a term plan? What does it mean? A term plan is a specific type of life insurance policy that provides protection for a definite period of time or term in the event of the unfortunate demise of the insured person during the specified term. The insurance company pays the beneficiaries of the insured a predetermined sum of money. So what does it mean for homemakers? Insurance companies usually offer term cover to homemakers as an add-on to their earning spouse's cover. Such policies are designed to financially protect the family if either of the policyholders dies. The drawback is that these policies have a higher sum assured for the primary policyholder, who is the primary earning member of the family. The secondary policyholder or the homemaker has a low sum assured. Insurance usually cap the cover for the non-earning member at rupees 40 to 50 lakh, according to experts. Until recently, homemakers could not buy term insurance for themselves without their spouse's insurance coverage. The minimum requirement for spouse insurance was that the husband's income is above rupees 10 lakh. But this is changing now. Homemakers can independently get their own policies now and choose the coverage they like. To discuss more on this, we have financial planning expert Bhuvana Sriram, who's also the co-founder and head of financial planning, House of Alpha from Mumbai. Thank you, Bhuvana, for joining us. We are also joined by a homemaker, Kavita Rajesh, who has some basic questions on this positive trend of homemakers now having the freedom to choose their own term insurance policies. Thank you, Kavita, for joining us. Welcome to the show, Ms. Bhuvana Sriram and Ms. Kavita Rajesh. Through your interaction, we hope we will be able to cover most of the questions that arise when one hears about the independent insurance policies of homemakers.
Should homemakers look to take a term insurance or a money-back policy?
First things, Kavita, thanks for inviting me on the show. And it's a very interesting idea, homemakers insurance policy. I think this is after Supreme Court's ruling saying that a homemaker's value add or there is an economic value, there's a notional value for the economic contribution that a homemaker makes to the family. So taking from there, insurance companies have picked up this idea, and it's a very positive trend that you give it an economic value and give them also insurance. For a couple of reasons, I think it is very useful to have insurance for homemakers. Number one is the costs that otherwise would be incurred if the homemaker was not in place. It's going to be if the homemaker passes away or is incapacitated for some reason, the family will undergo financial troubles in the form of having somebody to take care of the children, having somebody to cook, having somebody to drive them around. So there is definitely some kind of a notional value to the work that they do, and that will have to be compensated for the family. That is reason number one. And also for a woman, if her parents are dependent on her, while she is dependent on her husband financially, some kind of a life insurance would be a great backup in case something happens to her, because her parents will then be left high and dry. While your question has been on whether they should take a term plan or a money back plan, you could take either of them. Both of them are great ideas. A term plan is a pure life cover, which means there is a payout only upon death. But a term plan gives you the benefit of payout upon death, and it also acts as some kind of an investment plan. So like putting an RD, money in the recurring deposit in a bank, it can also accumulate and it can become some useful asset. It can come in handy when the children grow up, or you need money for maybe a down payment of the house or something like that. However, you'll have to think of a few things while you choose a money back plan. Like, you have to align the date of maturity of the plan to the need when you will need that money, right? So you don't want a 15-year plan when your children have to go to college in the next 5 years. So you'll just have to think of a few things while taking a money back plan. While I would vote for having a pure term plan and doing more flexible investments like a recurring deposit or a SIP through a mutual fund as an investment idea. So did that answer your question?
So according to what you say, it's not mandatory that I nominate only my husband. I can nominate either my parents or my children, anybody whom I want to, is it?
You can nominate anyone as long as you're the proposer in the plan, in the policy. So if your husband is the proposer of the policy, I don't think you can nominate somebody else, because he, as the proposer, will have the first right to receive the proceeds. However, if you're taking the policy for yourself, as you're the assured and the proposer, then you're free to nominate your parents.
But is it not easier for the homemaker to kind of have a dependent policy, because it's less of paperwork and other this thing to be done?
Most certainly, Kavita, I would agree it's much easier to get a dependent policy. One of the key documents that an insurer will ask for before giving you a policy is income proof, right? So it is not going to be easy getting that policy. Let me be upfront. While there are some attempts by some insurance companies with tie-ups with some, with some marketplaces or with some intermediaries to come out with these policies, it's not going to be easy getting these policies. The most common way of getting insurance cover for a homemaker is as an add-on policy with the primary earners policy. And there is a maximum limit, I think, of 25 lakhs or 50 lakhs that you can get for the homemaker's life.
What difference do you think this will bring about in the sector itself? Or do you think it will have some sort of impact on it? Do you see more people in the Indian context coming forward and taking up such independent insurance policies as homemakers?
See, the first thing is, I think the whole idea that a woman's life, even whether she's working or not, has some economic value itself is a huge leap in how we view these people. The amount of respect that they can get because of this one acceptance of this concept, right? Socially, I think this is it can be a game changer. However, we've always ignored the fact that many times, the concept that only sons take care of their parents is a gone thing, right? Even daughters take care of their parents, whether or not they're earning members. So that, okay, even if a husband is supporting the wife in taking care of the parents, if the wife is not there, what interest is the husband going to have in taking care of his parents-in-law, right? His ex-parents-in-law, right? So that's an idea that people don't really understand, and I think this will bridge that gap and ensure that we're taking care of our parents also, whether we are girls or boys. We take care of our parents as well when we are there and when we're not there as well. So it's just as much a responsibility, whether you're a woman or a man. So whether this will bring about a change in the insurance landscape, I don't think so. I'm not very sure it's going to be a big impact thing.
Okay.
In terms of, how big the insurance industry and the different kinds of products that it does, this might probably be something very fringe. However, something that I like in this policy is the rider benefits. The critical illness rider that these policies offer can come in use because getting a standalone critical illness also is difficult, because that also requires establishing income, and the premiums are very high. So this rider can become something that's a useful feature in the policy.
What if my spouse has a work-related policy covering the entire family? Even then, is it necessary for a homemaker to get a policy? And will the work-related policy be still effective for the homemaker included in the policy?
Kavita, usually work-related policies, if a company is giving insurance for its employees, the life cover is only given for the employee. Usually never for family members, because the company doesn't, foresee a financial loss to cover family and children and, spouse and all that. But what they do is they give health cover for the families, never a life cover. So they're two different things. So company provided policies are usually only health covers, which can continue, which is always good to have. And you will never ever give up on your company policy, because that is why you should make the claim. If you have a personal policy, never make a claim on it, because you can accumulate no claim bonus, right? So you will never give up on a company provided policy, while having a backup personal policy also for health. But life insurance is different. The earning member will have insurance that the company provides, and will also have to have insurance that the company does not provide. Because what if he changes his job, or the company just decides to not give insurance or not renew the policy next year, right? So those things are not in your control, right? So the earning member should anyway have their own life cover, independent of what the company provides. But a company will never provide life cover for the dependent spouse.
Okay.
Yeah.
And can I have this as a loan security if I have a loan on my name? If I happen to take a term insurance?
Okay, so that's an interesting question, Kavita. Prima facie, I don't know who will give a loan to a homemaker, because how will you repay the loan, right? So if you have to establish.
If I do some entrepreneurship, sorry to interrupt you. That it's if I
Okay,
step
okay.
into some entrepreneurship, yeah.
Fine. Then you know more homemaker, right? So you are a businesswoman, right? So
Oh, okay.
yeah, right. So then it's legit. It's fine. But you will getting a loan for a homemaker, even for some reason, they can be a joint borrower for a home loan or something. And if the insurance company will accept the term policy as a security, very well. I don't yet. They are insisting on a term policy, of course. You should have a term policy. The insurance companies are insisting on it. It can be used. I mean, it's up to the borrower to accept. The lender to accept. It's up to the lender to accept the policy as a security. But a life insurance cover is not really security. It comes in handy only when the person dies. If you simply default the loan and go away, it's not any security. It's not like, you're giving your house as a security or a car as a security.
The other question I had in mind was, is there, most of these economists, many experts usually have these, calculations that they have. If you're earning X amount, this is the Y amount that you should insure. If you're saving so much, this must be your insurance. For a homemaker, do you think there will be a yardstick? I know it's too early to discuss those things, but since the concept is being thought about, a value to what they're doing, so to say.
Yeah, of course. Why not? So you can calculate human life value. Whatever you can develop various models to do that, because I mean, even at work we have a human life value. While you can't really attach a life value a value to the human life, you can say, okay, if this person were to die today, what is the loss that the family will incur? If they are earning, then you would say the next 20 years of their earning life, their income is lost. So you will calculate. Or you can go the other way, saying that had they been alive, what all expenses would they have taken care of? Like children would have been educated, they would have paid the loans, and then family would have survived. So that has to be compensated. You can calculate, you can come about with a model for it. Similarly, you can do it for homemakers as well, right? So you say, okay, in case this person dies, then the family will have to employ a cook, will have to employ tuition people for children, will have to employ a driver to drive the children around, will have to employ a caretaker for the parents, right? So you can just list that down and come up with something. Or you can simply go by the model that family expenses 50% is taken care of by the spouse. And you could make a multiple, saying if the family's income is 10 lakhs, you say 5 lakhs, and then create a multiple. I mean, I'm sure insurance companies will have some method to do this also. They won't give you unlimited insurance. They will say, this will be how much insurance I can give based on the family's household income and expenses. So, of course, you can.
Any idea how the premium amount is being calculated for a homemaker? Because will it be viable for a homemaker to dip into her savings and pay the premium every month? Is that taken into consideration?
While how much the premiums are, I mean, it'll depend on the age and it'll depend on the health conditions and the medicals and all of that stuff. I normally life insurance premium for women is less than that of a man because you expect the longevity of a woman to be higher. You know, life expectancy for women is higher than that of men of the same age. I mean, if you compare, and how can the homemaker fund this? This is an interesting question. She could take if she can take an independent policy without having to ask her husband for money to do it or permission to do it, then she can pay the premiums herself from her savings, right? I mean, so there is absolutely no reason why she should not. It's quite legit, and it becomes pretty much something that you've controlled and you choose who to nominate, and there's a lot of freedom if you can do that.
So, since you brought up the age factor, I just want to know: should the thinking about these policies begin at what age should the thinking of such an independent homemaker policy begin?
So usually an insurance policy is better taken young because most insurance policies are level premium policies. If you know what I'm talking about, level premium is, see, for a health insurance policy, as your age increases, the premium increases. So it really doesn't make a difference whether you take the policy at 30 or at 40. I mean, provided that you get the policy at 40. Between 30 and 40, if you do get some illnesses, then it becomes difficult. But premium wise, there's no disadvantage in not taking it early. But on a life insurance policy, if you take the policy at 25, and let's say your premium is 5,000 rupees, it will remain 5,000 rupees as long as the policy is in existence, right? So it makes sense to take it early, because if you're 40 and you're taking a policy, then the premium is likely to be much higher, because that's how insurance companies look at the risk. And also, if like right now, the woman might be a homemaker, but she might, once the children become independent or they start going to school, she might want to get back to work. Right. So, take the policy as soon as you can. There is no right time to do it. The moment you start thinking you need a policy or you need some kind of a life cover for yourself, you should just take it. But as even for a man's life, for that matter, as time goes by and if you're building enough assets, the need for life insurance reduces. I mean, you can still have life insurance as an estate plan, as a way to pass on money to the next generation without hassles or without taxes, which is like a good idea. But the need for life insurance reduces as you age. So as you age, the cover can increase, or as you age, the cover can decrease also. So, I mean, conceptually, the need for life insurance can reduce as you age, because one thing you would on the other side would have started building wealth through other sources, through your investments or through your PF or gratuity or whatever. So the need for life, even in case the earning member dies, there are assets to take care of the family. So the life insurance requirement reduces. Similarly for a woman, right? So if the systems are set and the children are taken care of and the parents are not around, so it's the financial dependence reduces. So the impact reduces.
All right. So thanks so much, Kavita, for asking these questions. And Bhuvana, thank you so much for taking the questions and answering them. Sure. I think we've done several of these big money shows, but I think this is one thing that's I personally found very interesting, because as Bhuvana was mentioning, it's signaling a social change, and we'll have to sort of wait and see how this plays out. And I'm glad we could discuss this at this early stage, even when this idea is being thought about and being worked upon. So thank you, Ms. Bhuvana Sriram, once again, Ms. Kavita Rajesh.
Operationally, if the insurance companies make it easier to take such policies, I think there is a chance that it can become success. Otherwise, it's just an idea on paper. So.
Yeah, I think that's a very important point. They need to sort of make it easier on the women or on the homemakers to try and get access to these policies easily. And also this idea should spread. People should understand that there is value to what they're doing at home. And that needs to be insured also. So thank you. Thank you so much for joining us. And to our viewers, in case you have any questions, either regarding this show or any other ideas that you'd like us to discuss, please drop your comments in the comment section. We definitely take them up in the subsequent shows from here. Thank you. Thank you both for joining us once again.
Thank you. Bye-bye.
See you soon. Bye.
Subscribe to the Federal's YouTube page for more interesting updates.